Amazon up 30 bips. Let's go down to the C-Bone and bring in Scott Bauer. He's the CEO of Prosper Trading Academy. Scott, let's talk some Amazon. Standing out like a sore thumb among the FANGs, not at its all-time high.
Yeah, you know, I actually think we're going to get back to that all-time high sooner rather than later.
There we go. Blow me up.
Print in. I see a 2,000 print in the offing here. Maybe not on earnings today, but I think it's not too far off. That being said, Oliver, you know, it's hard to discount the volatility that's in the marketplace right now. And, you know, like you guys were just talking about, the expected move is somewhere around $60 to $65 or so. So what I'm looking at right here is selling some of that premium, selling some of that volatility, but I'm taking a little bit of a bullish bias to that, and I'll explain how. I'm selling the downside put spread, the 1820, 1800 put spread. Okay, I'm selling the upside call spread, the 1930, 1950. I can do that for somewhere around $9 to $10. Okay, now the maximum that could ever go to, whether the stock went to zero, which is not going to happen obviously, or if the stock went to 2,000 or 3,000, the maximum that could ever go to is $20. The difference, the width between the strikes on both sides of the spreads. Okay, if I'm able to capture almost half of that, I love that. I love that reward to risk. Now, the reason that this is slightly on the bullish bias side is because my strikes to the upside are higher than they are lower to the downside, if that makes sense.
Right. Okay, so I like this, Scott. So 1820, 1800, and the call spread as well to the upside. So you've basically got kind of a range bound here that you want to keep Amazon in, right?
1810 to 1940.
1810 to 1940.
Within that range, anything within that range by the end of the day tomorrow, because this is a spread I'm doing one day, January 31st expiration. Anything in that range, end of day tomorrow, I make money. Anything outside of that range, I'm going to start losing money, but I know what my max risk is. My max risk is about $10, no matter what happens to the stock. I like my chances with this trade.
Okay, so this is basically, if Amazon does its dive, like its swan dive it did last time, we got to have a bounce back as quick as we got last time, because there was like a 10% drop in the middle of the session, but then we, boom, just snapped right back.
No doubt about it. And listen, I don't expect to hold this until the end of the day tomorrow. I'm looking for that print, you know, overnight tonight, see where we come in and trade tomorrow morning. I don't expect to hold this unless the stock is literally just trading, you know, smack dab in the middle of that range, 1870, 1880, 1900. Otherwise, I'm going to manage it and I'll close it out. I'll pay a little bit to close it out, but I love the reward to risk opportunity on this thing.
Yeah, all right. 1810 to 1940, so like Napoleonic to World War II, and we're good. All right, I got it.
Wow, you are the history buff.
Hey, Scott, what about the rest of the market here? Does it make sense that we are continuing to apply this coronavirus to economic outlook, or should we trust the chip makers who tell us things have turned the corner?
You know, I think you have to do a little of both. I would look at it and say it's 80-20. 80, focus on the earnings, focus on what chip makers are showing. 20% because of what has happened over the last week with this thing spreading so quickly. It does need to be a factor, unfortunately. However, that can shift in a moment, but I think that the market is still really trading on fundamentals. It's trading on these earnings reports, but the risk is there because of what's going on with the coronavirus.
Yeah. All right. Vol at 17. Time to fade VIX here, Scott?
I don't do anything right here. I actually had a position on, I think we've talked about it. We got long at around 12.5, 13. I unloaded it actually on Monday
long
of this
VIX?
week on the first big drop off. Yeah, I was long VIX.
Okay.
Around the 12.5, 13 level, unloaded it around, you know, when we got above 18 here. I'm neutral here. If we get above 18 again, I'm shorting it. If we get down below about 14, I'm going to buy it.
Yeah, all right. Here we go. Scott, we will be watching it. So VIX goes below 14. You ready for more vol? You say you're buying it, or the market?
No, I'd buy some upside VIX calls at that point.
All right.
If VIX drops below 14.
Okay. Scott Bauer, nice, good conversation here. We're watching Amazon.
Thanks, Oliver.
All right, CEO of Prosper Trading Academy down at the CBO.